Sharma, the ED, Bajaj Auto, joining in the show right now to talk about exactly that. Rakesh, hi, morning. The domestic two-wheeler sales broadly flat, but the CV sales, they grew about almost 21% on a month-on-month basis. Do you see this divergence sustaining? And what does it really say about consumer sentiment on ground right now?
Good morning. Yes, thank you. The November in itself is not a very good indicator of either the industry or any company because, comparing it with last November, which had Diwali in it, is not the right comparison. The right comparison is really to look at September, October, November as a total to read some meaning into the numbers for the industry and obviously for us. And thanks to, I would say, the GST cut and the timing of the GST cut, the industry has swung into the positive zone. April to August, the motorcycle industry was at -1. And now April to November, the industry is at, almost 8%. So it's about a 8 percentage point swing in motorcycles. The great thing about this is not just the quantum of growth, but the quality of growth. What we have found is that in each segment and in each sub-segment of motorcycles, the customer is gravitating towards the higher end proposition. And that plays very well to our strengths, which is, being product-led. And therefore, we have found that our growth has been driven by, in each sub-segment, the higher end variants. And this has allowed us to start to increase our market share, which had been a little bit soft most of last year. But in the last 3-4 months, we have started acquiring market share in our strategic segment of the 125cc plus. And like you said, this has also had a major impact the three-wheeler segment, where we are seeing very big growths in the industry driven by the electric three-wheeler. And there again, we are now combined with exports running to almost full capacity in our plants.
Hi, Rakesh. Good morning. This is Harsh here. Talk to us about trends that are shaping up in the two-wheeler segment, because your numbers on a YOY basis, as you said, is not exactly the best comparable. But give us a sense as to what trends are playing out. This GST rate cut, how is it playing out on your numbers? And what are you anticipating or penciling in going forward, maybe over the next year or 2 years, on the base that you had of FY25? What's the growth outlook looking like?
Well, like I just said, Harsh, that the GST rate cut has swung the industry into the positive zone. And obviously, that is very, very helpful for us to have a positive, supportive environment for growth. And it's the quality of growth. So if you see the 125cc plus segment has benefited more than the 100cc segment. In the 125cc segment plus segment is the 150cc's. In the 150cc segment, it's usually the top model. You generally have a base model and then with a few more features, the top model. So the key consumer trend is one of upgrading in displacement, upgrading in features, etc. And this has helped us because we have tried to position our propositions, make them feature rich, and try to upgrade the customer at every segment and sub-segment. And this has been very supportive for our initiatives for improving market share. And that is what has driven our market share. And, we've got the best 125cc, the best 160cc from a price and proposition point of view, a 250cc, etc. And all these have done well. And that is what given us a combined effect of improving our market share in the last 2-3 months. And I am thinking that this trend should continue, particularly in quarter 4, which is January, February, March, because December, as you all know, the degrees of freedom are less. The consumers sort of holds back purchase and comes back in January, February, March. And there is, of course, the Pongal season down south in Tamil Nadu.
Rakesh, but what's really stood out for you has been your export sales, both in Q2 as well as November. What's aiding that? And are there any currency tailwinds, particularly in Africa, which are also supporting pricing and realization for you?
Yes, of course. The soft devaluation of the Indian rupee is very helpful to a company like ours, which is, between 40 to 50% of our revenue comes from international sources, which are denominated in dollars. So over $2 billion of exports per annum. And therefore, the devaluing rupee is helpful in that aspect in going straight to the bottom line. And yes, exports has been doing very well. As you know, that it's been been growing at about 15 to 20% month on month, year on year. So driven particularly by LATAM and a return of Africa and Asia. The fact that LATAM is doing very well for us is also impacting our mix because we sell, again, our premier Pulsar and Dominar flagship brands over there. And therefore, again, the mix impact in growth in exports is also very helpful and supportive to our margin story.
And with regard to the new launches that are upcoming, especially the Pulsars, should investors think of this as a reset of domestic market share in terms of versus current levels? Do you expect it to climb as a result of these launches? Should that be something meaningful that one can expect?
Oh, yes, absolutely. There was a period between, I would say, October last year and April this year, where our market share had softened. We have taken countermeasures to that in terms of, expanding our portfolio and positioning our products more competitively, giving more options to the customer. And as soon as the environment has turned more positive, which is, September onwards, we have seen an immediate manifestation of these moves in the improvement in market share. And we are continuing with introduction of new variants and models. We have something coming up in December, and then, of course, again in January, March, and April. So there is a really good pipeline, which hopefully will keep the tempo going.
Okay, Rakesh, on that note, congratulations once again, and glad that you could take time out and join us today.
Thank you very much for having me.